of corporations, and there will become more. And I guess in a sense, yes, it'll be, we don't want to invest in companies that are bad players. We also don't want them in our towns, and we don't want their products in our stores. And I think that's becoming much more mainstream in the market with the United States.
And in Europe, would this mean that we would perhaps have some more SRI funds, but that's ESG mainstream, so the integration of ESG aspects in traditional portfolio management becomes wider and wider?
Again, I think that we have seen a very huge growth of SRI funds over the last 10 years, I think, but this growth is, to some extent, we are plateauing now. And I think that now more and more people just want to understand the risk, the opportunities for the mainstream portfolio. So what we start to see now is kind of reverse engineering. I give you my portfolio, a normal mainstream portfolio, explain me where are the risks, where can I modify maybe my sector allocation or my system allocation to be more in line with sustainability. Just to give you one fact, also last year with Lynch we launched the SRI consensus based on the components of the 500 biggest SRI fund in the world, disclosing the components. And interesting to see that the sustainable capital allocation, that's why investors tend to over-allocate 10 times more in water than in the usual sectors. They tend to allocate 10 times lower in tobacco or alcohol than in the traditional MSCI or Dow Jones indices. So we can see that SRI changed something. SRI modified the capital allocation to sector or to stocks. But I think that honestly the number of purely dedicated SRI funds, if you really want to create this kind of funds, you need the belief. If you wait for the proof, you can wait. Sorry, I mean that I think you can wait a little time.
I have the impression that ESG integration is mainly to lower investors' risk, but and to create opportunities. So quite a defensive way to do it. But how it's done? There are no rules. The principles for responsible investment don't give any minimum standards. So don't we have to make a more clear distinction between responsible investment and sustainable investment?
Yeah, I think we can get lost in the trees and forget the forest following along that line. My sense is that the broad number of investment professionals that integrate social and responsible criteria have very similar approaches to what they do, and far more in common than in difference. I mean, when I used to come to Europe, I'd hear them say, oh, well, we're not the Puritans, we don't avoid anything, we just look for the best. But none of them actually invested in alcohol, tobacco, gambling, nuclear power, military weapons. I mean, because investing in the best leaves off the worst. I mean, it's kind of two sides of one coin. And I see that around the world, actually, in Asia, and Latin America, and South Africa. So what I would say would be a focus would be to have the structures surrounding finance blended in more of a way that's friendly to this form of investing. For example, in the United States right now, particularly among the more conservative political faction that habituates Wall Street, we've got a deep concern with Basel III and how it's ruining banking. It's a terrible thing, and now Obama's rolling over and playing dead, and letting Europe tell us how to run our most vital institutions, the banks of America and things. And I always hope in front of a European, particularly audience, to help them understand that we are a global economy now, and it is very helpful to have global standards that, yes, even the United States has to play by. And I would focus, rather than on careful definition of what is what in SRI, those bigger things, the standards that there be some kind of accounting for externality, that there be some kind of fiduciary standard that focuses on whether or not you're picking up all the costs of your behavior or you're forcing the taxpayer to pick up the costs of your behavior. And those kind of big picture things investments and also responsible investing. I do agree that occasionally we get really tripped up in the faith-based investing, and that there may be faiths that feel a keen interest in defining what it is to be invested consistently with that faith. But in terms of ethics, I think we put too much emphasis on it.
What, Piero, what do you need, or what do you self have to do to make products and services reflecting true environmental and social costs, and thus leading towards the further spread of the conviction that sustainable investment is necessary?
Well, I think some people in the audience who've been around for a few years may remember the times when essentially companies were just, the whole system in the company was only driven by financial results. And now, over time, we've introduced elements like customer satisfaction, like employee satisfaction within the parameters, with different weighting of how you actually manage performance of people within the company. I think that if we actually want to embed ESG into the corporate culture, we have to get to the point where some of these elements have to be driven into the corporate cultures as part of the compensation and performance measurement. And like in all good corporate governance, it starts at the top, and then it has to come down, because clearly you can't pretend that the company is operating a certain way if the board is not held accountable, or if the senior management of the company is not held accountable. Now, this is not an overnight process, so I don't believe that there's a magic wand out there that we can wave and all of a sudden it starts happening. But until we actually start introducing these elements, and we have seen that it does happen, because it has happened in other elements, when people realize that if you have poor employees or unhappy employees or dissatisfied clients, ultimately your financial performance, your sustainable financial performances get hurt. In a similar manner, we have to do it with ESG.
This is the company side. Seeing the investor side, the question of what role can they play to push those developments, those processes which are necessary within the company. My impression is that a lot of investors are willing to take into account some ESG aspects, and at least if they are a bit measurable, but that they don't really think it could be perhaps necessary to have a complete change of financial and economic system from the ground on to reach sustainability. Are they not really interested in a real sustainable economy within complete new structures? And how do you get, how can you reach a point to get them to know that this is important value?
Well, okay. One thing which always strikes me, I work for a broker, is that sustainability is mainly addressed at brokers by SRI teams, and never by economists or strategists. It's very, very rare actually. So maybe at one point what we need is to enlarge the scope of interest at brokers or at major institutions to make sure that the economists or the strategists start to look at what is the sustainable allocation of the capital, how they should invest for the next 5 years or 10 years instead of just the next 6 months or 12 months. I know that some work have been started on this. Definitely that could be a huge improvement. We need to know at one point which sectors are the most sustainable, which activities are the most sustainable, which ones we want to invest in for the future. So far, I'm not sure that this work is systematically done. I think it will help a lot. I hope that the Bank of America Merrill Lynch will take a big share of this work. Yeah.
Sorry, just a second. Yeah. Now, if you want to ask questions, if you want to discuss with us, please tell your name and which company